if you issue commercial paper today, you have to wait 24 hours to get your money. With the CPX and the way we've automated by using Canton, which is a commercial flavor of blockchain, you get your money in 7 seconds.
Welcome back to the podcast. Today I'm joined by Thomas Kornmeier, the CEO of Commercial Paper Exchange, or CPX. At RevGenAI, we focus on how B2B leaders are generating revenue through AI, thought leadership, and ultimately how they're shaping their go-to-market approach and systems to generate more revenue. Today, we're going to dive into really what CPX does, who they serve, and what's actually working right now for them to get a massive influx of inbound leads these past few months, and how they're really creating trust and generating pipeline in their industry. Thomas, it's great to have you.
Mayor, thank you for inviting me.
Of course. So I guess, not many people understand really like how CPX works and the very specific market that you're in. So can you just like break that down for us, explain what you do and who you serve?
We are an exchange that specializes in one very esoteric part of the financial system called commercial paper. Commercial paper is nothing more than a bond with a very short maturity date. So the limit on the maturity for commercial paper is 270 days. And the reason for that is that under 270-day maturity, you avoid regulation. And what does that mean for, the average human? What it means is that enterprises such as, let's take Ford Motor Credit, for example, they issue commercial paper in order for them to fund car loans, or in order to fund dealer inventory. And what they do is they will call somebody at an investment bank and say, investment banker, we want to issue 150 million of commercial paper with a 28-day maturity. Give me your best terms and conditions. And lo and behold, they will either get an email with a PDF attached, or they will literally get a fax from the investment bank stating the terms and conditions. Let me give you an idea why that is kind of crazy. The total commercial paper market on an annual basis is 1.4 trillion with a T. And that is obviously a ton of money, and it has not been automated. Companies automate their inventory. There is no reason why 1.4 trillion worth of assets should not be automated. And that means putting it on an exchange so you can issue it with efficiency, and allowing you to, if you already own commercial paper, to put that out there if you have to sell it because you need the money. You can't wait for it to mature. None of those features exist in today's market. And so the Commercial Paper Exchange, CPX, was founded to automate that entire process. And in so doing, we bring down the costs. So today's environment costs somebody a relative number of what's called 11 basis points, maybe less, maybe down to 7 or 5, but certainly, in that range. What we will do on the CPX is we offer you the ability to do your commercial paper at a flat rate of 2 basis points. So you pocket the difference and you get the convenience of automation. And the automation is important here because in today's market, where let me just give you an aside. I was asked to present in Houston, and the person that invited me said, give a good illustration of today's market for commercial paper. And I got a video of a fax machine spitting out a page, because that's literally what the market today looks like. So if you issue commercial paper today, you have to wait 24 hours to get your money. With the CPX and the way we've automated by using Canton, which is a commercial flavor of blockchain, you get your money in 7 seconds. So we do it for less. You get your money faster. It's more reliable. And if you have to get out of the bond, you can sell it in a secondary market. That's the more than 25 words, but I think that's a fairly good representation of what we do.
Yeah, I think you broke it down really well. It's a lot clearer now. And I'm surprised that this hasn't been done already before, and that you're
So
the
was I.
one who's really implemented this, and it's taken up until 2026 to automate such a huge portion of the financial balance sheet. Um, yeah, and I understand the value proposition both for institutional investors as well as for companies who are looking for that short-term funding to bridge the gap for inventory or for any other use case for that shorter-term period. Who's the specific buyer of or the decision maker who decides whether they join your platform? Is it treasury desks, CFOs, asset managers? Who is really the buyer of the platform that you're building here?
So it's all the above. Treasuries in major corporations will do both. They will issue commercial paper, or they will buy commercial paper, depending on where they are in their cash management process. So, for example, companies you would never dream of that have complex treasury requirements would be like Microsoft, Oracle, Google, big players in commercial paper, because they have cash flow challenges, shall we say, and commercial paper helps take away some of those challenges. Then on the other side, the largest consumer of commercial paper are your money market funds. That is how, if you look at what a money market fund offers you, it's a better interest rate than what you get in a check or a savings account from a bank. You have checking privileges over it. And the reason they're able to do that is because they get a higher interest rate by backing their portfolios with commercial paper. So other entities, government agencies will issue commercial paper to bridge funding matters on big capital projects, sewer systems, pipe, big roads, bridges, and stuff like that. And then once the infrastructure is built, they'll issue like a 30, 40, 50-year bond. But in the meantime, they use a lot of commercial paper to bridge their funding gaps while it's in construction.
Gotcha. Yeah. So I understand that, like, the main value of this is the short-term ability to kind of stabilize cash flow and less regulation, because it's also under that cap that the normal bond market has to respond to. I'm really curious. How did you get to this point of recognizing this opportunity, and how did you really build a platform that is capable of delivering this outcome? Like, talk me through that process a little bit, because you're operating at such a high leverage point right now, but I know it probably took a lot to get here.
The way I got involved in commercial paper intimately was a friend of mine sits on the endowment for a large Ivy League university. And part of their endowment is allocated to what they call the alumni angel. And so if you are an alumni of this university, you can go present your startup to this committee, and they will choose to fund you on an angel basis, not a venture basis, but an angel basis, to get you, stood up and running. He called me and he said, "Hey, we had a presentation by this company. They have this kind of front end for commercial paper. We don't know much about commercial paper, but you do. You might be interested in this." And so I got in touch, talked to the founder, liked the pitch, invested angel money in the company. Through all the fault of the management team, the company tanked. But what my realization was, and I always go into something with a B plan, and this was no different. If the thing imploded, I was going to pick up the pieces and go forward with a business plan. And the reason they failed is because they did not move into an exchange. They had the front end, but they didn't have the back end, which was the exchange. And that's really where the big enchilada was. And so I took what I'd learned from all the exposure there and moved it into this exchange paradigm. And so that's the genesis of CPX.
Yeah.
I won't name names, obviously.
Of course not. But I'm happy that you got here through all that experience and then was able to kind of connect that to this solution, because it's really clear how this is way more efficient than having no exchange. I am very curious, because I know that your industry can be can be so relationship based and so hard to break into when you don't have trust with these fund managers or with these enterprise companies. What is the most important part for you to really be able to create credibility and trust before buyers are ready to sign up and start transacting through CPX?
What I believe is important is one, relationships. So knowing somebody who knows somebody that can do an introduction is certainly a primary thing. The other is, once you get there, listen to people. Ask them about what's going on for their day in a life as a commercial paper issuer or a commercial paper consumer. You'd be amazed, Mayor, at how many people just go in and just, what I want to say, fire hose the audience rather than listen. If you go in and listen and say, hey, what's going on? Where are your pain points? And be thorough, and then play back where you add value as a CPX, as the owner or operator of the CPX. And just as importantly, where you don't solve their problem, get a level set on their expectation. So the introduction is first, then the credibility building by listening and playing back what you have and what you don't have to solve their problem, I think are two critical steps to get through the process and get people onboarded.
Yeah. I want to ask this question because at different stages, different things can be more important. But what do you think is more important? Is it what you know, or is it who you know that is higher leverage in business?
I think it's who you know, Mayor. And because you may know everything, but if you can't get in the room to talk to anybody, you're kind of worthless.
Yeah. I mean, I agree. I think the thing that I hear a lot of times is because people are so skeptical, it's getting harder and harder to kind of get an introduction, right? And actually get your foot in the door and create that trust.
Well, as you can tell, I'm not exactly a youngster. So I have a pretty deep Rolodex that I can draw on, where somebody that's, 25 years younger, they just don't have the leads that I have because of the number of years I've been out there. And so the relationship is key. I've got quite a Rolodex of relationships.
Yeah. Well, given that the fact that you have all this experience is compounded and you finally been able to really improve a massive problem in such a huge market, what do you think is the number one bottleneck in CPX's growth and ability to actually increase your market share?
Sure. Like any revolution or any revolutionary technology, you have a reluctance to change the way you are presently doing things. And this is no different. And in spite of the economics that we offer across the spectrum, people are like, yeah, you might be cheaper, and but yeah, we got a great relationship with our investment bank, and it's terrific. We want to stick with it. Well, the counterpunch on some of that stuff is if you take a large money market fund that's buying massive amounts of commercial paper, those funds had to be bailed out in 2008 and when COVID hit in 2020. And the Federal Reserve, had to step in and back those funds by buying their commercial paper. And what should have happened was that if you had a good relationship with your investment bank, they should have said, okay, we'll buy your commercial paper and get you liquid so you can meet your redemptions, rather than the Federal Reserve have to put a very complicated program together so they could put liquidity into the money market funds. And that's one of the things I hammer back on. It's like, well, if your relationship was so tight, where were they when you needed liquidity? So that's one thing that kind of puts a little, what I want to say, a little spike into things, starts people to think. And it's like, yeah, I had a call with my investment banker and yeah, they still wouldn't buy stuff back as a secondary sale. I was like, okay, well then we need to talk more. So you get those people that have a good relationship. They don't want to change, but then if you introduce a little logic in there, they not all of them come around, but enough of them come around to keep my weeks interesting. So that's one portion of it. The other is, believe it or not, the Treasury Department or the trading desk in a money market fund, they don't want to deal with IT. They've got their systems running. They've got whatever they need on their computers. And if they have to do something that forces them to go to IT, it's a friggin' nightmare. And so what we've done with our technology is we've been sensitive to that friction. And we offer, through agentic AI, an integration experience to our clients that is pretty much click and forget, and let the AI take care of that integration in the back. So the only thing you may have to call IT for is for a password so that we can get into their back office systems. And that is a huge selling feature as well. We're taking the friction out of changing because we're using AI to automate a lot of those things that they would be normally to be dependent on IT to perform.
Yeah. Yeah. Again, I think if you can make your product, when you think of really like what people care about, they care about getting the outcome that they want, getting it fast, and get it reliably, getting it cheaply. And it sounds like you're doing all those things, which is why it sounds like you're hitting the home run here when it comes to creating a very, very valuable solution.
If I may, let me just embellish one more thing. We addressed the investment banking relationship by basically allowing those that just don't want to give up the relationship to come onto our platform in a white label mode so that they have a one-to-one relationship via our technology with their investment bank. And the investment bank doesn't know or care what's going on with the CPX as far as an exchange goes. And the investment bank's client doesn't know or care what's going on, but they use our technology on a private level basis to get all the advantages I spoke of. So T+0 settlement, secondary market availability, but it all goes through the investment bank and that relationship stays intact.
Yeah. So that's even better than if you're not forcing them out of that relationship.
Right.
I'd love to hear a story of, I know you haven't gotten here on this path alone. Who's a business mentor or operator that really shaped the way that you think about revenue or go to market?
It's not just one person, Mayor. I have an advisory board that's 11 people deep. So from the founders of the BATS exchange all the way through to the former CIO of ICE, which owns the New York Stock Exchange, among others. And I've relied heavily on my advisory board for things like that because, for example, pricing in this exchange world is complicated. It's very profitable, but you have to know how to do it in order to have that high profit level. And I get that from my advisory board.
Definitely. If you were to go back in time and speak to yourself on the start of your entrepreneurship journey, or even speak to somebody who's looking to get into the the money market industry, what would be the best practical advice you could give them to help avoid some of the costly mistakes that you've in your career?
So the advisory board being a case in point, these are very experienced people that have done the walk and been successful. And that made, oodles of money at the end of it. But take what you get from people like that, but don't let them dissuade you unless you absolutely come to hard rock information that takes your feeling and your intuition out of the equation. Because if you think this is going to be big and you believe in what you do proceed. Do not let your dreams, drop out. I wish that instead of making that investment in that angel company, that I had looked at what I learned and trusted my intuition that the exchange was the major pin there, and done this sooner and then bought them out. My instinct was the exchange was the big play. My instinct, in that sense, was not good, in that I thought the people that were running that company could carry it off, and they proved in spades that they couldn't. So I would say the dream, the vision, don't let yourself be dissuaded by it. But if you get instinctual feedback on people or processes or conditions, you have to evaluate that as to whether it's still a go or not.
If I would sum it up, it's like, don't let yourself be dissuaded from your dreams, but almost don't be attached to the way to get there. Like, be very possible and take feedback from others, but always also kind of like trust in the process of what you're envisioning, what you're creating, and let that, carry you forward, which I think, I don't know if that's what you meant, but I think that's a really great
That's a good
insight.
summary. Thank you.
Yeah.
Yep.
Yeah. Well, hey, Thomas, I really appreciate you sharing everything with us today. But anybody who wants to reach out and connect and connect with you, where's the best place for them to reach you or CPX?
Yes. Just email me, thomas@thecpexchange.com.
Thank you so much, Thomas.
My pleasure, Mayor. Thank you for inviting me again.